This video is designed to help you start a cleaning business. At the end of the video, you'll find a valuable gift. It's a cleaning business plan that you can download, and will lay down for you, step by step, everything you need to know to start a successful cleaning business of your own. If you are new to this channel, make sure to hit the subscribe button for more videos like this. The first thing to consider when founding any business is how big, or small, you want to start. Many cleaners start out as sole traders with a handful of clients, and build up their businesses through hard work, until they're able to expand. That doesn't mean you can't set up a larger cleaning enterprise immediately, although you will have more upfront costs to consider. Employee wages, advertising costs, equipment purchases and rentals, and taxes and insurance, all require consideration. Starting a solo cleaning business is cheaper in the beginning, but might be more difficult to scale as the company grows. Before starting your cleaning business, take a look at the competition. How many cleaners are already in operation in your area? How many commercial and residential properties? Decide in advance what market you intend to target. While cleaning companies often have a combination of residential and commercial clients, specializing may give you an edge over the competition. Some industries require cleaners to use specific solutions or equipment that require training. This adds an upfront cost to start your business, but allows you to charge a higher price for your services. Once you have a business idea for your cleaning company, you can take steps toward becoming established. A good place to start is by gaining industry certifications that demonstrate your abilities. The American House Cleaners Association offers certification courses for cleaners. While we all know the basics of cleaning, as a pro you, or your staff, will be expected to know how to clean a variety of surfaces and stains, in the most effective way. Getting certified is a good way of improving your cleaning skills, and building trust with your clients. As well as getting certified as a cleaner, it's good business practice to make sure your company starts out on the right foot in other areas. While all a sole trader really needs is a client willing to pay them to clean, it is a good idea to establish your business as a professional outfit right from the start. This can also help save you headaches later when it comes to tax time, or when expanding or changing the structure of your business. Choose a business name that is easy to spell and pronounce, is memorable, and isn't too similar to other cleaners already operating in your area. Pay attention to local ordinances as well as federal requirements for naming and registering your business. An important factor to consider when starting your business is how much to charge clients. If you're working as a sole proprietor, you might make the mistake of thinking your hourly rate is the only important calculation. However, there are more expenses associated with running even the smallest business than just your wages to consider. Your overheads will soon add up, and there are additional taxes to pay if you're self-employed, which can quickly reduce your overall profits. Start your calculation with your hourly rate. According to FreshBooks, the standard rate most cleaners charge is $30–$100 per hour, depending on area and expertise. Check out the local cleaners in your area to see what the competition is charging. Your rate should be competitive, but if you want to price yourself higher than other cleaners, consider the value-added extras you can include in your service to make it worth the additional cost. Including some chores as standard, such as making or changing beds, sweeping external spaces, and washing windows, could give you an edge over companies that tack on additional fees for those services. Generally speaking, small business owners should reserve 30% of their income to cover taxes. Cleaning businesses also have other overheads to consider. There's the cost of bookkeeping and accounting, transportation costs to and from clients' houses, the time spent traveling between jobs, advertising, and the cost of purchasing cleaning materials and equipment. Cleaners rarely work a full 8 hours per day in a single property, and you need to account for that extra time in order to make enough profit each day for your business to be viable. If your cleaning business will be working in a niche industry, using specialist equipment or solutions, it's advisable to calculate the exact cost of each job, as it could be several factors higher. If you're using $50 worth of cleaning solution for each client, that will eat into your profit and significantly reduce your hourly rate. Next comes your overheads. These are the everyday costs of running your business. That could include office rent and administrative employees, business licenses and fees, advertising fees, website hosting, and maintenance, traveling time and more. Any costs your company incurs that are not a direct result of being in a property cleaning, also need to be covered by the rate you charge for the work you do. If you're working from a home office for a couple of hours a week, keeping your books in order, your admin costs might be comparatively low. However, a large-scale cleaning operation with a number of employees could see administrative costs soar as high as 50% or more. Finally, add in your markup. This is your business profit and a buffer in case of unexpected costs. A good rate is 33%. This means a third of your fee goes toward profit and covering the cost if the estimate was short or another expense runs over. The next part of the video is not specific to a cleaning business. Nevertheless, this knowledge is essential for success in the cleaning business, as well as in any other business. Ignore it at your own peril. Operating a successful cleaning business will depend on the following 4 conventions. 1. A practical plan, with a solid foundation. 2. Dedication, and willingness to sacrifice, to reach your goal. 3. Technical skills. 4. Basic knowledge of management, finance, record keeping and market analysis. As a new owner, you will need to master these skills and techniques if your business is to be successful. 1. Does your product or service satisfy an unfilled need? 2. Will your product or service serve an existing market in which demand exceeds supply? 3. Will your product or service be competitive based on its quality, selection, price, or location? Market analysis. For a small business to be successful, the owner must know the market. To learn the market, you must analyze it, a process that takes time and effort. You don't have to be a trained statistician to analyze the marketplace, nor does the analysis have to be costly. Analyzing the market is a way to gather facts about potential customers and to determine the demand for your product or service. The more information you gather, the greater your chances of capturing a segment of the market. Know the market before investing your time and money in any business venture. The following questions will help you collect the information necessary to analyze your market and determine if your product or service will sell. This brief exercise will give you a good idea of the kind of market planning you need to do. An answer of no to any of the questions indicates a weakness in your plan, so do your research until you can answer each question with a yes. 1. Do you know who your customers will be? 2. Do you understand their needs and desires? 3. Do you know where they live? 4. Will you be offering the kind of products or services that they will buy? 5. Will your prices be competitive in quality and value? 6. Will your promotional program be effective? 7. Do you understand how your business compares with your competitors? 8. Will your business be conveniently located for the people you plan to serve? 9. Will there be adequate parking facilities for the people you plan to serve? Planning your startup. The following questions are grouped according to function. They are designed to help you prepare for opening day. Merchandise. Have you decided what items you will sell or produce, or what services you will provide? Have you made a merchandise plan, based upon estimated sales, to determine the amount of inventory you will need to control purchases? Have you found reliable suppliers, who will assist you in the startup? Have you compared the prices, quality, and credit terms of suppliers? Business records. Are you prepared to maintain complete records of sales, income and expenses, accounts payable, and receivables? Have you determined how to handle payroll records, tax reports, and payments? Do you know what financial reports should be prepared, and how to prepare them? Finances. A large number of small businesses fail each year. There are a number of reasons for these failures, but one of the main reasons is insufficient funds. Too many entrepreneurs try to start and operate a business without sufficient capital, money. To avoid this dilemma, you can review your situation by analyzing the following 3 questions. 1. How much money do you have? 2. How much money will you need to start your business? 3. How much money will you need to stay in business? In order to answer the second question, how much money will you need to start your business? You need to prepare an estimate of all your startup costs. Here is a list of items you may need to take into account. Note that this list is for a retail business. Items will vary for service, construction, manufacturing or online firms. Decorating and remodeling, fixtures and equipment, installing fixtures and equipment, services and supplies, beginning inventory cost, legal, professional fees, licenses and permits, telephone utility deposits, insurance, signs, advertising for opening, unanticipated expenses. Now, the answer to the third question, how much money will you need to stay in business, must be divided into 2 parts, immediate costs, and future costs. From the moment the door to your new business opens, a certain amount of income may come in. However, this income should not be projected in your operating expenses. You will need enough money available to cover costs for at least the first 3 months of operation. The following list will help you project your operating expenses on a monthly basis. Typical expenses for 1 month may include your living costs, employee wages, rent, advertising, supplies, utilities, insurance, taxes, maintenance, delivery, transportation, miscellaneous. Now sum up the total estimated monthly expenses and multiply it by 3. This is the amount of cash you will need to cover operating expenses for 3 months. Deposit this amount in a savings account before opening your business. Use it only for those purposes listed in the above list, because this money will ensure that you will be able to continue in business during the crucial early stages. By adding the total startup costs to the total expenses for 3 months, you can learn what the estimated costs will be to start and operate your business for 3 months. By subtracting the totals of the lists from the cash available, you can determine the amount of additional financing you may need, if any. Now you will need to estimate your operating expenses for the first year after startup. The first step in determining your annual expenses is to estimate your sales volume, month by month. Next, determine the cost of sales. You may want to use a spreadsheet to do this. After startup, the primary source of revenue in your business will be from sales, but your sales will vary from month to month because of seasonal patterns and other factors. It is important to determine if your monthly sales will produce enough income to pay each month's bills. An estimated cash flow projection will show if the monthly cash balance is going to be subject to such factors as the following: failure to recognize seasonal trends, excessive cash taken from the business for living expenses, too rapid expansion, and slow collection of accounts if credit is extended to customers. Conclusion: if you have carefully answered all the questions in this video, you have seriously thought about your goal. However, there may be some things you may feel you need to know more about. Owning and running a cleaning business is a continuous learning process. Research your idea, and do as much as you can, yourself, but don't hesitate to seek help from people who can tell you what you need to know. As we conclude this video, it's time you get your free cleaning business plan gift. Go to the description below this video to get it now. It is completely free, no strings attached. Thanks for watching. If you enjoyed this video, please like and hit the subscribe button for more videos like this.